This is Countdown to Economic Collapse, August 28th, 2011. I'm David John Sponheim, running for president in 2012. This past week, of course, major drop in the cost of gold. I predicted the price of gold would go up to $2,000 an ounce by the end of the year. I believe that's still true. But what has happened is our country is reacting to changes in the amount of reserve funds needed to buy margin loans in the gold market. The numbers speak for themselves. Take a look at this.
As we saw gold unexpectedly fall last week, let's look at Bloomberg. Their analysis of what happened in the gold market last week when the price dropped dramatically. Prior to that, the margin rates required minimum cash deposits of 22%. It was set at $7,425. Then right after the drop, they raised it 27% to $9,450 per 100-ounce contract needed. The amount of activity will drop as more and more people buy actual metal as opposed to the paper margin loans. Ultimately, CME will dictate the price and where we're headed. COMEX is making it more expensive for speculators to trade the metal as open interest for gold options climbed to a record 1.263 million contracts on August 18th, and prices slumped more than 7% in 2 days, erasing the gain of the past 2 weeks that sent the metal to a record $1,917 an ounce. It will add selling pressure even past today.
Now, if you are one of those investors that is scrambling to find places for your money, then you know that the best choice is to buy the precious metal itself, not to buy futures, not to buy margins, just to buy the metal itself and store it. Now that's a strong recommendation coming from a person who doesn't have a lot of money. You see, I'm an average person. I don't have a lot of money to invest in the gold market or the silver market. My investments many years ago were in computers, and I got hit hard. I spent thousands of dollars on computers, and now you can buy what I bought for $10,000, you can buy for $1,000, which is interesting. The average consumer is getting hurt left and right, and our economy relies on consumer confidence. We're seeing consumer confidence dive right now. Companies don't understand that customer service is everything. Companies like Microsoft, Google, and eBay, these companies don't understand that you have to touch the people that are actually spending money with you. If you don't talk to them, if you don't communicate, they get very dissatisfied. Recently, JetBlue was a problem for us when making a plane flight. We encountered no returns, no refunds, and no wiggle room. And we found out that even bereavement is not covered by JetBlue. They just took our money. It's as though they're legally able to steal money from their consumers. Now, how can our country continue in this pattern? How can we continue to betray the very people that we rely on to spend money? We want people to invest in this country, and we can't do that right now. You know, even Warren Buffett, the person who's at the top of the banking community, recently spent $5 billion in helping Bank of America out, and he has some recommendations for our country's government to resolve its tax issues. Okay, this is from the opinion pages of the New York Times, written by Warren Buffett. It's called Stop Coddling the Super Rich. This is coming from him, folks. This past week is an important article. Our leaders have asked for shared sacrifice, but when they did the asking, they spared me. I checked with my mega-rich friends to learn what pain they were expecting. They too were left untouched. While the poor and middle class fight for us in Afghanistan, and while most Americans struggle to make ends meet, we mega-rich continue to get our extraordinary tax breaks. Some of us are investment managers who earn billions from our daily labors but are allowed to classify our income as carried interest, thereby getting a bargain 15% tax rate. Others own stock index futures for 10 minutes and have 60% of their gain taxed at 15%, as if they'd been long-term investors. So even Warren Buffett is asking the government to make these too big to fail companies pay their fair share. Last year, his federal tax bill, the income tax he paid, as well as payroll taxes paid by himself and on his behalf, was about $6.9 million. That sounds like a lot of money, but what he paid was only 17.4% of his taxable income, and that's actually a lower percentage than what was paid by any of the other 20 people in his office.
and their tax burdens ranged from 33% to 41% and averaged 36%.
Even Warren Buffett is telling the government to tax the rich people. The too big to fail companies need to actually pay their fair share. So that's why we support a fair flat tax at America's Third Party. A complete revision to the tax code, eliminating all those pieces of paper that have been turned into loopholes, tax credits, and deductions. Virtually 77,000 pages of tax code will be erased by a fair flat tax. Now, the one idea that we are proposing is a 10% fair tax and a 10% flat tax. Balanced out, anyone making less than $100,000 a year in income won't pay any taxes at all. And the fair tax will essentially put 10% on non-food items up to $10,000. So if someone's buying a car, they would be taxed only up to $10,000 at that 10% rate. This will help our economy resolve its tax problems. Companies like ExxonMobil will pay their fair share. They don't pay any taxes right now. The tax revenue that will come in from big corporations and banks will be enormous and will help our economy rebound and will provide a stable amount of money necessary to function. Our country draws around 12% of its GDP just to run its operations, and we're only paying the interest on our debt. Most of the money you pay out in income taxes goes to the Federal Reserve to pay that interest. So ultimately, our country will have to slowly climb out of the debt that it's in, but we're going to have to resolve the problem with the Fed. Now, this past week, Ben Bernanke has essentially done nothing. That's all the Federal Reserve can do. That's the big thing that he worked out in Jackson Hole, Wyoming. The fact that he couldn't do anything or doesn't believe that we should do anything. Take a look at this. This week, the Federal Reserve announced they weren't going to do anything. As you can see, in 2008, banks took a huge hit, and they're starting to take a huge hit again this past couple weeks. But they see the regional banks as being steady, and they're waiting for more indications that the economy is in a deep recession. This is an example right here that the regional banks needed to rally above relative resistance to sound the all-clear signal. Perhaps this is what Ben Bernanke is looking at when analyzing the hard data, but we are still in a downward trend. So it's highly unlikely that Ben Bernanke is going to be able to do anything. QE3, quantitative easing 3, probably won't happen. You see, we can't borrow more money now that we've been dropped to a AA rating by Standard & Poor's. We can't borrow more money without it costing us even more money in the future. So we are going to be looking at saving money. And one of the first things we need to do is get rid of the Fed. The Fed is costing us money in just the amount of money they pull out of every dollar. 5 cents out of every dollar goes to the Federal Reserve. And since 1913, they have taken $24 trillion out of our economy. You see the picture? We have to cut the size of government by as much as 50%, reducing the amount of money our country spends. The long-term analysis of the economy shows that the tech sector will continue to lose ground, especially in hardware. What you're seeing with Hewlett-Packard will happen with other companies as they fight for that frenzy of consumer delight, the tablet market. Now, ultimately, we're going to see major flaws in our economy begin to show their ugly face. The mortgage-backed securities are beginning to go belly up right now. Municipal bonds, 2 trillion of them, will begin to be undermined by the fact that cities and municipalities cannot pay their own workers and certainly can't finance their losses by selling their own property. Now, I've heard of many cities like Chicago using foreign companies to run their parking structures. $1 billion or more go out in parking fees to European companies that manage parking in Chicago. We are concerned that our country is losing track of what really matters: the people, the resources, the nation. Let's get back to the basics, folks, and realize that our country is losing ground with a two-party system. I believe that the third party will emerge and solve America's problems, and I will lead the nation as your president in doing so. I'm David John Sponheim for America's Third Party, and I support this message.
Check us out at americasthirdparty.com.